Allegra, do you remember what happened to SVB in March 2023?
Yeah, and actually it was very serious, but it came and went very quickly. And I think looking back at that weekend, what was notable was that it felt like the end of the world. And then quite quickly, it felt like the end of the world had been postponed or averted. We were all worried, weren't we, that this was the beginning of dominoes falling.
Yeah, and SVB was known by, of course, people that banked with it and entrepreneurs, but it wasn't widely known. I mean, I remember getting a call of someone saying, like, look, what's happening with SVB? I have a lot of money. And I had to look at the Bloomberg terminal to see exactly what the bank was. And it all happened online. So this was depositors saying, watch out, something's happening with SVB, get your money out. And then it all unraveled from there.
Yeah, and it was further confusing for me because I have a friend whose initials are SVB.
and this was not about that friend.
What's happened?
In the UK, we lived it a little bit differently because actually they wrapped it, legally. They were able to sell it, SVB UK, to HSBC for £1.
If 2009 was the example of every single part of the banking estate getting it wrong or being caught off guard, then what happened last year is possibly them learning those lessons. Welcome to In the City, Bloomberg's podcast connecting you to the conversations and the stories shaping the world of finance. I'm Allegra Stratton.
And I'm Francine Lacqua. And this week, a conversation with Erin Platts, the Chief Executive Officer of HSBC Innovation Banking UK.
2023 was quite a year for you. Can you reflect back on, was it March of 2023 when you were working for SVB?
Yes.
And now you're working for HSBC.
Exactly. I mean, we were talking before, I think to describe it as a whirlwind 2023 is probably really fair. I was, embarking on my 20th year working for SVB. So personally, it was a pretty interesting year. I think for me, the theme for 23 was resiliency, but also keeping perspective. We had a very difficult set of circumstances in March that we had to deal with. The UK business was a solid business, and we had to find a way to find a new home. But keeping perspective that we've actually landed in what I think is an unbelievably positive place. But I would be lying if I said anything other than 2023 was extremely difficult personally. But I'm actually going into 2024 with a really good sense of optimism, and a bit of rest has helped.
Just looking at at how it was all managed in March, if we think back to 2009, 2008, and how banks went down, and it's still seared in all of our memories, that sight of seeing people snaking around the block outside banks trying to get their deposits out and their money out and so on, that was a kind of case of everything being badly handled. But then if you fast forward to the episode you were involved in, it seemed like actually everything seemed to work much better and people had learnt the bad lessons of 2009 and that period.
I think that's right. One of my reflections on that March weekend, and it truly was a weekend, right? It was a Friday night when the U.S. parent got taken over by the FDIC, and then we had this task, the team, the board, and I to sell a bank in a weekend. What a daunting experience that was. But the only way we were able to do that was a collective effort. And one of the things that I continue to be unbelievably grateful for is how the venture capital and innovation founder community came out for us that weekend and said, hey, wait a second. The UK and European business is a great business. It's integral to this economy. Let's not set back this important sector by 5-10 years. Let's figure out a way to support them. Now, again, because the UK business was standalone and it didn't have some of the issues that our parent had, it was actually a really good asset to sell. So then, but having, to your point, the support of policymakers, the regulators we worked in lockstep with through that weekend, our advisors, the board. I mean, you look back and you think, how the heck did that happen in a weekend? But it did. And Monday morning, opened our doors as HSBC, opening up accounts, bringing on new clients.
And Erin, it always has to happen at the weekend, right? We saw it with Lehman Brothers, with Credit Suisse, because actually it's the only time where the markets are closed. And then we heard of, these incredible calls between like people in government and regulators that may have been on weekends with like also spouses and wives kind of trying to cobble this thing together because they had 2 days and otherwise the market would have freaked out. It did show resilience. It showed that the UK also, on a regulation standpoint, actually made it safer.
I agree with that. So winding back the clock. So I've been in working in innovation and in this space in the UK since 2007. I've had the opportunity to grow this business. There was 4 or 5 of us and got multiple banking license. And one of the things that we did in 2022 in partnership with the regulators was switch our business from a branch to a subsidiary. If we did not do that, I would not be here today, right? So that shows the strength of the UK reg regime. It's kept our clients safe. It's kept my team safe, and it allowed us to sell the business, package it up again, and make that happen over a couple of days.
Yeah, and I remember speaking to chief executives on the back of it saying, that's something as the UK that we should be really proud of. And too many times, certainly the last 2-3 years, we beat up on the UK saying, well, this was not good. The Bank of England could have done this. But actually, this was a thoughtful way of keeping the business alive, of keeping the financing alive, and selling it to HSBC.
I think that collective should be pleased and proud of what happened last year. It's a good story.
So Erin, what does this mean for the ecosystem? So you basically took over, or HSBC took over some of these loans and financing for a lot of entrepreneurs for this ecosystem that's so important if we're going to grow the economy in the UK. Has it changed much on how you lend, you give money?
So HSBC bought the whole entire bank. So that's all of the loan book that you referenced, all of the client accounts, the depositors. So basically, we had this standalone entity, massively oversimplifying, but we swapped one parent for the other. Now, as we've integrated it into HSBC, how I would describe it is an extension of our capability. Part of the journey for the old SVB business was how do we expand the platform to do more than just banking and lending to a larger portion of the innovation economy. And when we talk about innovation economy, this is everything from newly funded startups through to public and private large corporates, as well as then lending and banking to the VC and PE funds that invest in innovation and outside of it. So that's the kind of cohort that we're talking about, that full ecosystem. But the HSBC platform now allows us to do more with that existing client base and be more relevant to a larger portion of that innovation economy. And what I mean by that is we now have access to this global markets, 55 plus markets that HSBC has a presence in, investment banking capability, asset management capability, private bank and wealth. So all these tools that founders and funders need to start and scale businesses, we can bring to bear in a way that we've never been able to do it before.
Erin, one of the other things, and this was kind of the strength, but also I guess the weakness of SVB, is that everybody wanted to bank with them. So you didn't have a huge different customer base, which was a problem, but everybody wanted to be there because you were the coolest, because it was the best parties, because it was an ecosystem, because entrepreneurs would speak to each other.
I've never been called cool, so this is exciting.
You'd definitely be invited to our dinner parties. So how does HSBC keep with that? I mean, it's seen as a little bit of a dinosaur, safe pair of hands. It's kind of like a mismatch to what SVB was pre-HSBC.
So SVB did have this brand synonymous with innovation. Our ability to convene as HSBC Innovation Banking, I think, is a net positive from where we were. And what I mean by that is I've been very, very fortunate that I've gotten to keep my whole entire team. We've kept that expertise. We've kept the relationships and the partnerships that we've had externally. So there's a familiarity. And now we actually get to couple this with the stability, the strength, and the sophistication of the HSBC platform, which was lacking when we were in the previous institution. So that's not to say it's not hard. We've been very hard at work around delivering this new brand into market. We're hoping if we squish those two things together, that will resonate, but it's definitely important that we keep telling that story.
And that question, we were sort of the end point for all of this and the exit for the startup and the kind of, the happily ever after, this question of listing in London. Can you just give us your impression of how they are? Are they starting to think, no, we're like Arm, when we get big enough, we're off? Or are they thinking, actually, there's some reforms that are being announced that if they are what they say they will be, we could do business in the UK?
So the vast majority, I think it's also important to keep in mind, the vast majority of our clients in this cohort, this subsector, actually exit via M&A. So having a robust M&A environment is really, really important. So that's kind of point one. But you're absolutely right. Having a healthy public market in the UK is something that we all would like to see. I'm more optimistic that we're having the right conversations in what you're talking about, Edinburgh reforms, Mansion House reforms, around how we unlock money, how we reduce friction, how we get the right coverage, the depth of research and analysis into this space is critical. There's still a big delta, if we're being honest, between the public markets in the UK versus the US. We still have some catching up to do, but what gives me hope is we're having the right conversations.
Erin, how many clients have you been managed to keep from SVB?
So we've kept, I would say, the vast majority. So the March was obviously a big weekend. And then if you look at March till today, we're net positive in terms of client acquisition. Q4 was the best quarter that we've had in terms of welcoming new clients into HSBC UK platform for what we do in over a year. But we have lost some clients in March for sure.
Allegra, do you think it's easy or actually harder to be an entrepreneur in the UK than it used to be? Because we talk about this a lot, and certainly when you're at a dinner party, you'll have like one or two people trying to do.
Fran, what are you talking about?
I don't get invited to dinner parties.
This is our new, what you're changing in 2024. Allegra, a dinner party every week, arranged by Fran.
Can I have my children?
But when you talk to innovators or entrepreneurs, they're like, the UK is still a nice place to be. When you look at some of the kind of the rigid labor laws in.
I think it's a watching brief, because I think we and I'd love to know what Erin thinks about this, and it's something Fran and we both talk about a lot week in, week out on this podcast, is the government doing enough to put in place to make it more attractive to, once you've started up your company, to stay here. So that's the now kind of famous debate about listings and so on. We'd love to know what you're seeing from the companies that you support. So we're in a sort of holding pattern, especially because we have an election coming into view, and so it's sort of I don't know how much more we'll get policy wise. And we have had a lot already, and we just need to see it work through the system. So, they call it the Edinburgh reforms, but essentially, can they make it more attractive to list here? That's the great outcome, which is when you get big enough, that's even a thing.
But also, where do you want to live? I mean,
where do you want to live? The culture.
If you're an entrepreneur and you say, look, I need to start a company, I want to start a company, do you choose London because it's close to capital? So even if you're not necessarily going to list here, you find the money. There's a bit of a buzz that feeds you, compared to, say,
language,
Frankfurt,
time zone, all of those familiar
language, time
points.
zone. Like, Erin, entrepreneurs, people that, have started, you're lending to them. Is London still the right place to be in?
So I think there's a couple of right places. London is definitely high on the list. So, and to your point, the access to capital, 40% of venture capital across Europe was raised in London, in the UK in the last 5 years. So it is a hub of access to capital, and therefore it does attract founders here.
And your research shows that that's remained the case and is as strong, or if not stronger now.
Yes, exactly. And I don't anticipate that changing too much in the next couple of years. I think the having a concentration of capital here is helpful. So you have funds like Highland and Atomico and Dawn and IQ Capital. These are well-established managers that have been here and I think will continue to be here. Plus, I think the other lens is we're seeing U.S. firms continue to not just deploy capital, but set up offices here, which I think is a good trend. So that attracts kind of founders. When we're talking to entrepreneurs, and whether that's earlier growth stage, they usually focus on three key elements around their businesses. So access to capital, which we've talked about a little bit, access to talent. And I think London's a wonderful place to be. What an amazing city. So I think that there's a lot to love about London. We've also seen really good, I would say, better disbursement or
that's fascinating. Your
from
report.
A geographic.
Birmingham does well. Sheffield,
Birmingham, which hadn't really shown up in any of our data in a meaningful way until the last year or two. And then, of course, you have the hubs of Cambridge, Oxford, Bristol, Manchester, which will remain. So then it comes access to talent. And I do think London is I've been here for 17 years. It's home It's a wonderful place to live. I think we need to keep shouting about the good. Then I think a really important part of the conversation that we don't tend to talk about as much as capital, listings, talent is growth, revenue, and procurement, right? So the UK as a destination for successful companies outside of the innovation economy, banks, financial services, insurance providers, retail, our innovation companies need to access those to grow. The other thing I do hope that we spend more time on as an ecosystem is how do we unlock growth opportunities, procurement opportunities through the government? How do we get UK PLC to take more of a quote unquote chance on early stage technologies? That's where I think we're falling a little bit behind in the US.
And do you see that works better in other countries?
Yeah, for sure. I think in the US, obviously largest, most established, mature innovation hub in the world, we see much more of a risk appetite to work with a Series A entrepreneur than the average, established company here.
It rings
but
true.
Why is that? I wonder whether, and this government has tried, right, by saying to pension funds, look, you have to put a certain small percentage into early stage investment. But is this because people is it risk taking? I mean, everybody kind of wants to be the first investor in the next Facebook, right?
Yes.
But is it because they don't think it'll come from a UK-based company, or they're just more conservative with their money?
I think there's a couple of things. There's the investment into, whether it be pensions money going into the VC and PE funds for them to deploy, or that money finding its way directly. And then there's the, UK PLC, for lack of a better term, actually deciding that instead of using a really well-established software provider, they're going to take a view and engage with the early stage community and find that next gen technology that will help them. I think we're starting to see some of this on the Gen AI space, where it's an and, not an or. So larger companies are working with the more established Microsofts and whomever of the world, but also saying, hey, wait a second, there's some really cool early stage Series A, Series B Gen AI companies, multi-AI, faculty, that are saying, let's bring these people on board. So I think, sorry, to answer your question directly, I think it's about maturity of the market, efficiency of the market. I think it's about how do we bring these worlds together in a way that, where people are talking apples and oranges, apples to apples, not apples to oranges. I think there's also a sense of the pace that startups need to move means that they can't wait for 12 to 18 months for a decision on procurement.
There's just one question I feel I should ask, just because we always have it posited as the reason why the UK is not attractive anymore. And I don't love the Brexit question, and I'd love that we were moving on from it, but we're just not. It's not affected you. You said it's got stronger in the last 5 years. Just explain why you think your area of the economy is managing to buck the trend.
A strong UK innovation economy is even stronger if the European innovation economy is strong. So if you look at the data, again, over the last 5 years, every single country has seen growth with the exception of Germany, which was down 7%, and Spain was like flat or maybe down 1% to 2%. The cross-fertilization of capital talent is massive between the UK and Europe. So I think it's not an us versus them, it's an and. We really need, and the UK VCs that we've talked about are making investments everywhere. Brexit has not helped anyone, right? But in terms of the innovation economy, because of that movement of money, talent, ideas, it created friction. However, we work with one of the most agile, ambitious, optimistic companies in the world.
It's a real tonic.
They find a way, right? They don't have the ability to let that hold them back. So they find a way.
All right, when you meet a new client, can you tell whether they're going to be the next Mark Zuckerberg?
No, I think I'd be retired now if I did.
But is there? I don't know. Is there a pattern? Is there something like?
There are. If I look back on
can you, Fran?
Yeah,
bottle it.
New idea.
For me, it's the
Have
opposite.
You met them?
Who I think is amazing. It usually ends up in
reverse indicator.
Jail.
I think you meet with some founders and you think, wow, like there is something special about this person. Now, whether they become the next Mark Zuckerberg or not, you know that they're going to make a meaningful impact on the sector. But I've gotten it wrong probably more than I've gotten it right, to be perfectly honest with you.
And what are the traits you've been doing it a while?
Yeah.
What are the traits that you think, right, they've got this, therefore this is a good indicator?
There's this balance between unbelievable levels of confidence and ambition and just the never stopping, but with this humility, because an amazing founder and entrepreneur, they not only need to break down barriers, they have to have this deep self-belief and resilience. They also need to bring people with them on that journey. So that humility piece. And so when you see the combination of those two things, you're like, wow, this is just I find it so energizing to be able to be a small part of their journeys.
Erin, thank you so much for joining us.
Thank you.
Thanks for listening to this week's In the City. We'll be back next week. But in the meantime, if you like our show, please head on over to wherever you listen to podcasts, rate, review, and subscribe. It helps people find the show. This episode was hosted by me, Francine Lacqua, and Allegra Stratton. It was produced by Summer Sadi, and special thanks to Erin Platts.